Do you know how important your credit score is for your financial future? Let's dive into the significance of a good credit score and how it can shape your financial landscape. It's like a report card for your financial health, and just like in school, you want those high scores. But instead of acing a math test, here, you're being graded on your financial responsibility. So why does this score matter so much? Well, your credit score can be the key to unlocking many financial opportunities. It can be the make or break factor when you're standing at the threshold of significant milestones. Imagine you're ready to move out and rent your first apartment. The landlord doesn't know you personally, so how can they trust you'll pay the rent on time? That's where your credit score swoops in, acting as a financial reference. A good credit score can convince the landlord that you're a reliable tenant. Now let's say you're eyeing that university degree or that shiny new car, but you need a loan. Here again, your credit score comes into play. A higher score can increase your chances of loan approval and might even snag you a lower interest rate. Fast forward a few years and you're now looking to buy a home. A mortgage is probably one of the biggest loans you'll ever apply for. Guess what lenders look at? You got it, your credit score. A good score can make you a strong candidate for competitive mortgage rates. But it's not just about loans and apartments. A good credit score can also affect your insurance premiums, cell phone contracts, and even some job applications. In essence, a good credit score is like a golden ticket, providing access to favorable financial opportunities. It's a reflection of your financial responsibility and trustworthiness to lenders, landlords, and even employers. Remember, your credit score isn't just a number. It's a snapshot of your financial behavior, a measure of your financial trustworthiness, and an indicator of your financial health. So, take care of it, nurture it, and watch it grow. Your credit score is your financial passport, unlocking doors to favorable financial opportunities. What is a credit score and what does it mean? I'm sure you've asked yourself this question at least once. Well, let's unravel this mystery together. A credit score is like a financial report card. It's a 3-digit number that evaluates how likely you are to repay borrowed money. The higher the score, the better. This number is calculated by credit bureaus using a mathematical algorithm that takes into account various elements of your financial behavior. So, what are these credit bureaus? They are companies that gather and maintain data about individuals' credit histories. The 3 major ones in the United States are Experian, Equifax, and TransUnion. They each have their version of your credit score, which can slightly differ due to the different information they might have about you. Now let's move on to the components of a credit report, which is a detailed record of your credit history. It typically includes 4 main parts: personal information, credit history, public records, and inquiries. Your personal information includes basic data like your name, address, and social security number. The credit history section is the meat and potatoes of your report. It lists your credit accounts, including loans and credit cards, along with payment history and outstanding balances. Public records refer to any financial legal issues such as bankruptcies or tax liens. Finally, the inquiries section records any instances where a business has checked your credit as part of a loan or credit card application. Remember, the key components that affect your credit score are your payment history, the amount of debt you owe, the length of your credit history, new credit, and the types of credit in use. So why does all this matter? Understanding your credit score and credit report allows you to be proactive about your financial health. It helps you understand where you stand and what you need to do to improve. This knowledge can open up opportunities for better loan terms, lower interest rates, and even influence your ability to land certain jobs or rent an apartment. Understanding your credit score and report is the first step to financial empowerment. How can you build credit from scratch? That's a question we hear all the time, and today we're going to answer it. Building credit from scratch might seem like a daunting task, but with the right strategies, it's entirely feasible. First off, let's talk about secured credit cards. They're a great starting point for credit beginners. Essentially, a secured credit card is backed by a cash deposit that you, the cardholder, provide. This deposit acts as collateral and is usually equal to your credit limit. By regularly using your secured card for small purchases and paying your bill on time, you start to build a positive credit history. Remember, the goal isn't to spend up to your limit, but to demonstrate responsible credit use. Another strategy involves becoming an authorized user on someone else's credit card. Ideally, This would be a person who has a good credit history and practices responsible financial habits. As an authorized user, you can reap the benefits of their good credit behaviors, which in turn can help establish your own credit history. However, it's crucial to ensure that the primary cardholder makes timely payments, as their habits directly affect your credit. Applying for credit-building loans is another viable tactic. These loans are specifically designed to help people build or improve their credit scores. Once approved, the lender holds the loan amount in a secured savings account. You then make regular payments until the loan is fully paid off. The lender reports these payments to the credit bureaus, which helps build your credit history. Remember, building credit is a marathon, not a sprint. It requires patience, discipline, and a commitment to responsible financial behaviors. Keep your credit utilization low, pay your bills on time, and avoid taking on debt you can't afford. Building credit from scratch might seem daunting, but with the right approach, it's entirely feasible. And remember, the journey to a solid credit history is well worth the effort, opening doors to a world of financial opportunities. Scene script. Once you've started building credit, how do you maintain it and repair any damage? Maintaining an optimal credit score is like tending to a garden. You need to nurture it with consistent care and attention. One of the most critical aspects of this care is timely bill payments. You see, payment history makes up about 35% of your credit score. So, paying your bills on time every time is paramount. Now, let's talk about smart credit utilization. This refers to how much of your total available credit you're using. It's recommended to keep this ratio below 30%. If your credit limit is $1,000, try to keep your balance under $300. This shows lenders that you're responsible and can manage credit wisely. Another key point is keeping your credit card balances low. High balances can indicate risk to potential lenders and can negatively impact your credit score. So, as a general rule of thumb, aim to pay off your balances in full each month. This will not only help maintain your credit score, but also save you from paying interest. Now, what if your credit score has taken a hit? Don't despair. Repairing your credit score is possible, and we're here to guide you through it. Start by checking your credit report for any errors. If you spot any, dispute them immediately. Next, focus on reducing your debt. This might be a slow process, but every bit helps. Consider strategies like the snowball method, where you pay off small debts first to gain momentum, or the avalanche method, where you pay off debts with the highest interest rates first. And lastly, avoid common credit pitfalls like applying for new credit too often or closing old credit accounts. These actions can actually lower your credit score. Maintaining and repairing your credit score is an ongoing process, but with discipline and good financial habits, it's an achievable goal. Remember, your credit score is a financial tool. Use it wisely, and it can unlock doors to a wealth of opportunities. Let's recap the vital lessons we've learned today. We embarked on a journey to understand the importance of a good credit score and the significant role it plays in our financial health. We discovered that it's not just a number, but a financial passport that opens doors to favorable financial opportunities. It influences lenders' perceptions of our creditworthiness and can impact our ability to secure loans, rent apartments, and even qualify for competitive interest rates on future mortgages. Our exploration took us into the world of credit scores and reports. We learned about credit bureaus, the organizations that compile our financial data and generate credit reports. These reports reflect our financial behavior and are the basis for our credit scores. We also unraveled the mystery behind these scores, understanding that they are influenced by factors such as timely bill payments, credit utilization, and the length of our credit history. We then ventured into the realm of building credit from scratch. We discovered that this process is not as daunting as it may seem, especially when armed with the right knowledge and strategies. Smart credit utilization and keeping credit card balances in check were identified as crucial tactics for building a strong credit foundation. Our journey also led us to understand how to maintain and repair our credit scores. We saw that even if we stumble and face credit pitfalls, there are effective strategies for credit repair. We learned about the importance of avoiding common mistakes, such as making late payments or maxing out credit cards, which can negatively impact our credit scores. In the end, we understood that recognizing the nuances of credit can empower us to make informed decisions and avoid future setbacks. It's all about fostering responsible financial habits that will lead us to a bright financial future. Remember, your credit score is a key factor in your financial health. Make it a priority to understand it, build it, and maintain it. This understanding is not just a skill, but a lifelong tool that will serve you well as you navigate your financial journey.